Most traders go through rough weeks in the market due to poor market conditions, but there are three main types of results that most people will get. Number one, those people that find it difficult to find setups, or perhaps maybe they themselves took some losses throughout the entire week and therefore feeling very frustrated. The second type are those people that actually came out of the week profitable, even though the week was extremely difficult to trade in. And the third and the last type are those people that are actually a mix of 1 and 2. You had some wins, you had some loss, so you're around break even, so it wasn't too good of a week for you as well. In this Zoom with our premium members, Thomas, our Callisto ICT specialist, goes through the actionable steps and psychology you must have in order to be able to see consistent profits and results regardless of the market conditions. Make sure to take down notes and listen with intention, and I hope you gain a positive ROI on your time. Enjoy the video.
Right, very good. Okay, so just a sort of show of hands, you can type 1 in the chat or whatever it may be. Okay, how many of you found this week extremely difficult? Type 1. How many of you found this week pretty clear? Type 2. In between, type 3. Okay, so a lot of 1s and 3s, very little 2s. But those of you that type 2, you are way more experienced. You are way more experienced. So yeah, so you can see there is a fundamental difference between experience levels as well as how clear or how much clarity you have in the market. Now, I don't want to focus on those of you that found it very difficult or those of you that found it kind of in between. I want to focus on the guys that really found it extremely, not say extremely easy, but rather that found clarity in the markets this week. What do you think was the main thing that set you apart from majority of the traders worldwide, even, right? Maybe in this group, but even around the world. What do you think is the main thing that set you apart? Is it very simply because you are quote unquote better? It's a bit of an ego thing, but you're just quote unquote better. Or do you genuinely have some sort of secret sauce, anything basically, any factor that really helps you push you over to be more clear? And everyone said the same thing. Everybody said the same goddamn thing. Patience, journaling, being strict. I didn't coerce them into saying this. I didn't band them together before the stream and say, okay, guys, before we start the stream, I'm going to ask this question and I'm going to make sure y'all say patience, okay? I didn't say that, okay? That would be cringe. But that's the truth. That's the honest answer, right? And another question I want to push you guys to answer, the people that type 2. Are you, or rather, can you confidently say you can read every single price movement in the market? Yes or no? I mean every single one. No, I'm mainly talking to the people that type 2. And all of you are saying no. The thing is, do you need the ability to read every single piece of price action in the market to make money? The answer will also be no. Because when you wait for your setup and you are right, it will seem like it's clockwork. It's so easy. Again, directed to the people that found clarity. When your setup doesn't play out or when it's not there, what do you do? Wait, stay out, do other things. It's not rocket science. It's very easy, right? Or not easy, rather. It's very simple. It's really not that complicated. Your setup's not there, wait. And this is also how I want to sort of dive into today's topic. Those of you that said you are going to wait, you're going to be very patient, a lot of you have experienced the jumpiness of trading before. You guys have felt the rush, you guys have felt the adrenaline. You've all seen it and been there before. You didn't just magically start waiting for setups, magically start being more patient. You've never done that, right? You confirm have experienced some sort of pain that has led you to acknowledge that, okay, patience is the thing that really is going to pay me. And the main thing is probably this. Am I right to say that most of you who have found it easier, who are now more experienced in the markets, have sort of a changed expectation as to what you can do and what you cannot do on a daily, weekly, monthly, yearly basis in trading? Are you expecting millions after your first year? No, probably not. You guys are now acknowledging that, okay, with a smaller capital, I have to start slow. Agree or disagree? Those are you that found clarity. Those of you who are more experienced. 100%, right? There's no secret sauce. There's no mind-boggling fact or there's nothing special that sets these people apart other than the fact that they have managed their expectations and therefore have their psychology intact. Which brings me very nicely into the main topic for today, which is the journey that you experience as a trader. I'm going to draw two curves here. It makes it a little bit smaller. So right here, I have a learning curve, and over here, we'll have an earning curve. This is so extremely vital, and I need you all to pay very close attention to this. At the start of your trading journey, your learning journey will literally only be up. You will never stop learning as a trader. No matter how experienced you are, you'll still keep learning. There'll be that one point in time where you get so extremely familiar and you feel like you just have that aha moment and you just expand on that knowledge very quickly. And then it'll get to a point where it becomes way less steep, and then you sort of maintain a little bit, but it's still slowly moving up. So this is the learning curve. For the earning curve, more often than not, it's gonna look like this. You're going to start at break even, gonna get a little bit lucky with your wins, gonna lose damn close to everything or everything, and start slowly climbing your way back up. You have a little break even cycle over here where you go a little bit consistent, and then suddenly you're just gonna push higher. Why is this so important? In this art, you will never stop learning. There is never a point in time where you cannot learn something new from somebody else. If you feel like you know everything in trading, you feel like you know each and every single nook and cranny in the market, your ego is way out of check. You're not even close. Even I learned a couple things from you guys. I'm very open to any feedback, very open to any criticism, because I do keep a very open mind. When you guys mention something, I'm like, that looks interesting. Let me check it out. How can I understand it in my own manner? That's why the learning never stops. But that one phase whereby you feel like everything clicks, this part of the learning curve over here matches very closely with the earning curve. Another way to look at it, this area can also very well coincide with this area. I know what y'all are gonna say. Y'all are gonna say freaking inverse, whatever bullshit, inverse chart. But jokes aside, this is really where the learning happens. The learning happens with the losses. Some people, however, do not learn to the same proportional extent. Some people learn drastically less than they should when taking all the losses. Why is that? They learn disproportionately to the losses because they don't care enough. The pain from the losses that they experience is, very simply said, not enough to enable them to take action towards actually wanting to do something about it. One of the actions is, yes, you mentioned journaling, or even like a shoddy ass journal. Again, I can mention this every single goddamn week, but only a handful of you will actually bother to do something about it. The rest, this guy's just talking about the same shit every single week. Nothing new, what? Yeah, let me just leave the Zoom right now. It's okay. It's nothing new to learn, what? Every day, every week is the same thing. Journal, do whatever you need to do, blah blah blah. Okay, it's the same shit. I'm not learning anything, what? Fuck yeah, let me leave. It's okay. I can do better. I know what to do. If you truly feel that way, this is an open invitation for you to leave the Zoom right now. Okay, very good. So now we all have a common consensus that this is realistically how it should be. But the disproportionality comes with not caring enough. By not caring enough, under that umbrella, I mean genuinely not caring enough, making excuses as to why you can't do X, Y, Z, or very simply said, not taking action at all. If you fall under any of these three categories, I'm sorry to say, you're fucked. You will never make it. Every single successful trader I know has a journal, has a record book, has something to refer to. But that something comes in several different forms. I know some people love Excel, some people love Notion, some people love pen and paper. End of the day, it doesn't matter how you do your journal. I don't care the medium you use. I don't care whether you want to write it on freaking rice paper or use like noodles to freaking write out the letters or whatever bullshit. I don't care what you do. As long as it works for you. As long as you capture every single little detail you need to have, you are gonna be fine. For me, I like to capture number one, my chart markups, my MT4 screenshot, my feelings, how I entered the trade, and my overall comments. That's all I personally need. Maybe you need more info than that. Maybe you need a whole checklist before you enter a trade. Because maybe you're trying new strategy, right? You don't fully understand it, you need a checklist. Maybe you're collecting data on your back-tested strategy or your forward-tested strategy. What do I need to take note of that can affect this trade? What do I need to see that can cause this trade to fail? Or what do I need to see that can cause this trade to hit TP? So obviously, it all comes down to balancing. I want you all to sort of just think a little bit with me here. Think about your learning and earning as sort of like a pendulum, always swinging from one side to the other, right? Most of the time, the pendulum will just keep swinging and swinging and swinging until it loses momentum. Because the chance is, if you are not learning, you are probably earning because you think you know your shit, right? But when you are learning a lot, chances are you are not earning because you lose and you need to take note what the hell went wrong. That side to side swing is what is going to haunt you at the beginning of your trading journey. Because when you feel like you have nothing left to learn and you are too far to one side of the earning curve, you'll be like, I'm the best fucking trader in the world, man. All these idiots taking years of their time, I only needed 2 months. I'm the best fucking trader in the world, bro. What do I need this guy's advice for? But then when you take a massive loss, shit, it's time to hunker down. It's time to learn. It's time to do whatever I need to do to make sure my shit's correct. It's always a pendulum when you first start out, which is why finding early success in trading is, for the most part, I find it's quite dangerous. So if you feel like you're failing now, feeling a little bit lost, honestly speaking, good. You need to feel that way. But I'm also here to tell you that you can do something about it. It is well within your power to do something about it. Just because you might not be getting profits now doesn't mean it won't come later. The losing curve exists for a reason, because this is where you learn the most. And then you start to get more familiar with your strategy, and then you'll be a little bit break even. After you have found what you need to find out, when everything clicks, that's where you start to progress. That's where the earnings come in. When I talk about balancing this pendulum, the thing that is going to make it not swing as aggressively as it needs to, but yet getting the full benefit of a full momentum swing is your risk management. You don't want to lose a shit ton while you're learning a shit ton. You can lose a little bit, but still earn, or rather still learn a shit ton, because you manage your risk. You can get the benefits of both with minimal risk. So the question is, why are you having an all-in mentality when it comes to trading? It's as good as, like, how do I put it? Let's say you go to a casino, you see this fella on the slot machine, just lost his entire life savings. Like, literally, all gone. Nothing left to his name. And you go like, you know what? That slot machine looks cool, man. I'm gonna do the same thing. That's just dumb. What you need to focus on is garnering the full benefit of learning while minimizing your loss curve. So how do we piece it all together? How do we then reset our expectations to find that, you know what, hey, maybe I can't become a millionaire overnight. Maybe what I saw on social media or whatever the hell it may be isn't something I can attain right now because I don't have the facilities for that. I don't have the capital for that. Maybe I can't make 100k in a month because I only have 1k. What? If I'm only trading with 1k, how am I supposed to 100x it? Shit feels impossible. So here's how you reset your expectations. Start thinking small first. I literally need to start thinking, can I make $10 to $20 a day or even a week? Honestly, can I start making $10 to $20 a week? If you can, good. Why is that good? Thomas, why do you say it's good? Congratulations. You just paid for your weekly bubble tea expenses through pressing a few buttons on your mobile phone. I know it doesn't seem like a lot, but it's because your perception of what is a lot is so fucked. Your perception of a lot is hundreds of thousands of dollars when you don't have that same purchasing power as the other people that you see. Maybe their $10 to $20 is something like 10 to 20,000. But for you, your $10 to $20 at your current state Would be amazing. You covered your bubble tea expense. Very nice. Then after that, you start moving up. As your capital moves up, you start slowly growing the account. What happens? Maybe, I don't know, you start to get like $100 to $200. Oh shit, I can now pay for my family dinners. I can start treating my family to dinner every single week. Because why? I know how to trade now. And my capital is moving up. Then you start making it to what? 1,000? 2,000. Nice. I can pay my utility bills. I covered my phone bills for the month for my family. My bills are taken care of with trading. I still have my job at the side, but now I don't need to take out that capital and I can, do something else with it. And then eventually, you get to a point where this can genuinely be what you do full time. Don't think about it in terms of the actual number in itself. You can think about it in terms of percentage as well, but I don't feel like it has that much of an impact, because what's going to happen if you think about it in terms of percentage, you're going to just immediately jump onto like another Instagram page or another Facebook ad or whatever the hell it may be, and you'll be like, God damn, this guy made like 1,000% on his account. How the fuck did he do that? Then you just fall into the next trap and the next trap and the next trap. Gotta be realistic. How often does this happen? Not very often. But start thinking about how you can actually genuinely use this money to help you in real life scenario. Can I cover this with my trading? Can I cover that with my trading? Can I start going out for more dinner? Can I start treating myself to maybe an extra piece of chicken or whatever the hell it may be? Bump your expectations way down. It's too inflated at this point. Way too inflated. You really need to start thinking $10, $20. What can I do with this realistically? Because most people treat their trading capital like a bank account. If you saw an extra $20 going into your bank account, you'll be very happy, man. It's just $20 what? But if you made that $20 with a skill that you've learned and you can genuinely use it for outside purposes, congratulations. It's a good start. It's a good setup for your future success. So stop trying to have that thought that you can make millions in a year with this capital. Even 100K is way out of the question. So start getting your expectations right, and 80% of your psychology problems will be solved. Why do I say 80%? Because your confidence will skyrocket because you don't feel like you have to make a whole bunch of money anymore. You'll be very satisfied with that so-called minimal gain. Your fear will basically be gone because your target isn't too high, isn't too drastic, so you don't have to do too much. Just one or two trades that run pretty decently, good enough. Chances are you won't get angry because your risk management's on point. All of these little psychology obstacles that you face will immediately be diminished by simply setting your expectations to an appropriate level. I know everyone wants to make money. That's why we all started doing this shit in the first place. Think about it this way. You go through so many goddamn years of school to come out with, 4K a month job. How long did you need to get to that point of X dollars per month? Then you want to make the same thing with trading by only trading for 2 months? You're not going to commit the same amount of years to get to that same level of your job, or potentially even higher? Let's just be freaking real with ourselves here. So, tweak your expectations. Now you have at least some knowledge that, hey, we will definitely start losing when we start. When we just start trading, we're gonna lose. Maybe you get lucky here and there, but we are definitely gonna experience losses because you are fresh to this game. If you just started swimming and your competition was Michael Phelps, he will swim laps around you. So why are you having that same expectation of making the same amount of money that someone else with years more experience than you, months more experience than you, when you just started? It doesn't make sense. It's not logical. Bump it down and start looking at things in a perspective whereby, okay, you know what? I could really benefit from having this amount of money made through trading because I can spend it on XYZ. It can be very, very small things. It doesn't have to be huge. You don't have to, have the ability to bring your entire family on a vacation. Maybe you get to that point eventually. But for now, what can you realistically achieve? What can you realistically do with the money that you earned? That's all you really need to do. Any questions? Is it worth to pump the account each month with some money? For example, I usually put into savings 200 a month, put 100 into account. That's what I personally did, because when you first start out, your capital is going to be small. Relatively seen, the percentage of the money that you deposit is going to be a huge boost to your capital. Let's say you had $1,000 to trade. You put in 100 every month. You just increased your trading capital by 10%. But if you have $1 million to trade and you add in another $100, it won't really do much damage. So when you first start out, that percentage change in your account as you add and deposit money is going to be relatively huge. That will get to a point where there's diminishing returns in doing so. Then at that point already, you probably know how to trade. You probably know everything it is that you need to know to be profitable. And you're probably already profitable at that point. So you'll be completely fine at that stage. So yes, I would say it's worth, because that's what I personally did and I found success with it. After what point do we increase lot sizes? Let's say 10% increase in capital monthly. That really depends on your risk tolerance. I am always an advocate for calculating the lot size you need before you enter a trade. I'm a strong advocate of that. So if you feel you are going to base your new balance, or rather the percentage on your new balance, then you can do that as well. For me personally, every 5%, I shift that pendulum, so to speak. I shift that window. Let's say I make 5%. Now my account balance is 105% of what it normally is. I will use that 105% as my new 100%, if that makes sense. Could you recommend reading trading psychology books? And yes, any recommendations? Trading the Zone is very, very good for new traders. I will start with that first. And then after that, if you still don't understand or you still feel like you need more help, which I highly doubt it, you can read Best Loser Wins. I think those two are the main ones. I know it's going to take reps, but I struggle with translating the confidence I have when backtesting a strategy with taking that trade live in the moment. It feels like I don't know what I'm doing. Yeah, so that is a very dangerous part of backtesting as well, and which is why I'm not a super strong advocate of it, because I know that backtesting or finding the next data point or whatever it may be really, I wouldn't say the word force, but it gives you that false confidence in the fact that, hey, you know what, this trading plan worked for this amount of time. I will try and do it in the live market. And when it's actually executed in the live market and you find that it immediately doesn't work, you get that immediate feedback, especially if the first trade doesn't go according to your favor. That's when you start looking for a new back-tested strategy. So I'm always in favor of forward testing, always in favor of putting a very small risk on hand, so you actually get the proper reps in, you actually get the full experience of trading a live market. Damn, this is so disgusting. I just cannot get over how disgusting this looks. Ugh. This is looking better. I want to break below this low so I can see more potential short confirmations. So far, this is okay. GU. Okay, a little bit of SMT with EU, even though I don't really like using it, because we tapped this, but we didn't tap this. So a little bit of SMT. EU longs. I'm looking at EU shorts, my guy. Looking at EU shorts, bro. I'm personally looking at EU shorts. AJ longs, I can agree, but I feel like price has ran away without me. I'm not interested in chasing it, but EU shorts are possible. Your GU tapped. I think it's just a broker thing then. I think it's just a brokerage thing. If I look at FXCM, it will probably be tapped, if I'm not mistaken. Nope, it's not. Wanda maybe. Oops. Look at Wanda. No. Huh? Oh, Pepperstone. Okay. Yeah, just barely lah. Just barely. But yeah, it's not like a super huge thing lah. It's really just like a broker thing. But yeah, nothing to worry about, Brian. It's okay. It's not that deep, bro. Small matter only. Small matter. Don't worry so much. Which chart do you typically use? I use forex.com because everything is available on there. So yeah, I just use it for consistency. I don't really like messing about too much with the like the different sort of settings and whatnot lah. I just feel like it's very it just gives me that consistency, you know. Actually I want to break below this low lah. This low, break below this low would be better. I don't really want to like be too. I want to demand more out of price, especially when we don't have clarity. So I want it a lot lower. So yeah, I use forex.com, but you don't have to follow. You can just pick your own thing. You can use Pepperstone, you can use FXCM, you can use like Ohenda, you can use whatever you want. It really doesn't matter as long as it's consistent. As long as it's consistent. By the way, you can ask me any technical questions you might have. I'm open to it now because I've done the side part already. So if you still have side questions to ask, you can. If you want to ask technical questions, you can as well. Because if there is no questions at all, then I'm actually just gonna rest there. My voice is pretty fucked. But if broker difference is gonna affect on decision making, yeah, that's why. But the thing is, it comes down to picking your poison, right? Like, are you okay with a certain outcome? If the answer is yes, then yeah, whatever. Just take it as okay, I did this is this. Don't just because you lost the trade because of this minor difference, then instantly go and switch brokers or whatever. Because Brian, like the thing that you've been experiencing lately is you probably won more than you lost, what? So if you lost that one time because the broker messed you up, it's just that one time. So just take it with a pinch of salt. Just keep doing whatever you need to do. It's really not that deep. Yeah. You get what I mean? Yeah, because I know so many people, right, that have this sort of perception whereby they are really losing because the broker does this. Then I'm just like, okay, bro, you're focusing on the wrong thing. So yeah, you should be fine, bro. Don't worry about it. Oh, you're in. Yeah. To me, it's still okay lah. Like, it's not gonna be a massive deal, really. It's not gonna be a huge deal. Because if we really want to continue lower, we're gonna continue lower anyway. What? The lower time frame is not super important. Like, if we really want to continue lower, the first indication that you had was a higher time frame rejection. So if that happens already, more than likely, you are going to, have the trade play out if it does play out lah. But if not, then maybe something happened, which I can tell you what happens if it happens to not play out. But yeah, direction is way more important than entry. Yeah, correct. I have a question about fair value gap. How it acts. Bearish fair value gap acts as a slingshot down. Okay, so fair value gaps act as a place to offer fair value. Wow, no fucking shit, Thomas. Okay, let me explain. Fair value gaps, and it's a perfect example that I can use. I'll use GU lah. I'll use GU for an example. Let's assume we tapped into this already, okay? Because Pepperstone. Fuck it, I'll use the Pepperstone chart just to make it consistent. Okay, so fair value gaps are zones whereby fair value is offered. When fair value is offered, it means that you have an equal amount or equal opportunity of participants. Excuse me for that. It could be a bit loud. But equal amount of participation from the bulls and the bears. Okay? Key word here is participation. Opportunities for participation. Not so much how big we move down, how big we move up. Okay? And I will explain fair value gaps in just with this leg of price action here. So pay attention. Pay freaking close attention. Okay, so we start here. We have this bearish fair value gap, right? We can use it to push lower. We fail to do that. We consolidate. Why do you think we consolidate? Because we also have a bullish fair value gap trying to push price higher. So do you want to be involved over here? Answer is no, because you're just consolidating, right? So you don't want to be involved here. What you want to do is wait for further indications that you do indeed want to continue in a certain direction. Now, next thing, this bearish fair value gap finally prints, right? Finally, we have it. What happens? We tap into it. We try to push lower, we don't, right? How do I know we tried to push lower? We tried to push lower from this bearish candle over here with this long wick, but we failed to follow through on that. Another thing that contributes to this is the fact that we have CPI. So CPI makes price do this. Most of the time, before CPI, you will tend to see price doing this. We are collecting orders, we are collecting liquidity, we're collecting stops to then just push price in another direction. And CPI has this now. So CPI formed this fair value gap. And this is the one I need to pay the closest attention to. CPI pushed past a previous high. This whole area over here is one big mitigation block. Why do I say it's one big mitigation block? Because a mitigation block is very simply said market structure, your old highs, old lows. So this is your last structural high, right? In a proper macro market structure that got broken past. So when we have a mitigation block overlapping with a fair value gap, or we can also have an order block overlapping with a fair value gap, whatever it may be. When we have overlapping PD arrays, then that is what I call a fair value area, because I just like to lump everything together. So when we have a fair value area like this, overlapping with a fair value gap, you would expect price to, let me use the replay tool because I'm a hindsight trader apparently, we just use this. We expect this to happen. We expect a move into the fair value gap or the fair value area to then push higher. But you can see from the next candle that we reject lower very, very strongly. Does this make a lot of sense? If we wanted to push higher, shouldn't we just offer fair value here? Means we have the bears participating and then we just immediately push again higher with the bulls coming back to take over. If you don't have that, then the chances are we're not as bullish as you think. So this is immediately the early sign for me to switch my bias to start looking for shorts, which is why I'm currently looking for shorts. Because at this point here, if we don't expand off of this area, there's only one of two things that can happen, right? In the markets, keep in mind, markets can either offer fair value or seek liquidity. We tried to offer fair value here, but failed because we already got into that huge zone here. We are already in this huge zone and we have failed to expand higher. So since we do not offer fair value already, what's the next thing we can do? We have to seek liquidity. Where or which part of liquidity are we seeking? To the downside. So we have to seek liquidity to the downside, right? How are we then going to look for entries? Very simply said, you have new fair value gaps, you have new PD arrays to use. You can just look at new PD arrays in your new bias, your new direction to start looking for new trades. So when we just expand off of this, you see how nicely we react. We tap into this and then we push lower already. But here, we tap and then we just dump lower again. So we either rebalance this or we tap and go. How you identify that, I just went through it. Then at which point we execute, go to your lower time frames. For example, if you had a tap here, you saw breakaway gaps, this is a valid entry. You can look at EU as well, assuming you took a trade off of this 4-hour fair value gap right here. Notice, you see, tap, go, right? Tap and go, how? Just pay attention to the fair value gaps. Start paying attention to what you form, essentially. Okay, you see, okay, expanding lower. Okay, nice. This is a good area to enter. Right here, overlapping with the breakup. This is a valid entry. So you need to dive into the lower time frames if you want to be more precise. But if you don't care about precision, which is extremely strange, why wouldn't you care about precision? You can just set a limit lah. But also take note that if you aren't able to identify fully when we are going to rebalance or when we're going to continue or expand further from a fair value gap, then setting a limit is basically asking to get taken out. It's just asking to lose. Because let's say you set a limit here at this fair value gap to buy, congratulations, you are in deep drawdown right now. Or not say deep lah, you're in drawdown right now. Just because you didn't wait. If you want precision, you're gonna have to delve into the lower time frames. If you're okay with swinging and okay with holding trades for a very, very long time, then you can just set limits. But while you set limits also, you have to be able to read markets in this manner. Or not say this manner specifically, in your own unique manner also can, but make sure you are accurate. At least 70-80% of the time. How low would you go? 5 minutes. I wouldn't go to 1 minute. It's really not that productive unless you're trading something like futures. But in general, Forex, I like to have 5 minutes as the absolute lowest time frame to be in. I feel anything below that is just very, very noisy. Like for instance here, just take a look at gold real quick. Like you're gonna feel like you can trade this entire move. But if you really zoom out and really look at it, congratulations, you are caught in a range. There is so much noise here. There's literally so much noise. At which point do you want to buy? At which point do you want to sell? Can you truly tell me that at this specific point right here, I want to buy? At this specific point right here, I want to sell. And I want to get out at these areas also. Can you, with full confidence, tell me that? Probably not. Okay, probably not. So if you're trading the 5 minute normally, there's not much lower to go. So 10 minute or 15 minute. I never trade on the 10 minute chart. I feel like it's a very, very strange time frame to be at. But 15 minutes is still okay also. Most of my executions are done on the 15 minute. Do you use head and shoulders? No, I don't. Not saying it's not valid, obviously, but just think about it this way. Let's say 5 minute gold. You saw head and shoulder, sure. But is that really super duper important? Aren't we just in a range? So again, I like to emphasize this very, very often. I understand you're probably new, so it's okay. I'm not trying to like call you out or scold you or whatever. I'll just try to open your eyes a little bit. When you start to treat trading like school and you start to memorize different things, that's where you'll never grow. Because you're gonna forever be locked into this mold or this cookie cutter that says this head and shoulder pattern means you have to sell. This bullish engulfing candle means you have to buy. It doesn't make a lot of sense. Because if you think about it, I can draw anything on the chart and make it make sense. I've done it before. I have drawn a dinosaur on the chart and it has somehow worked. But it doesn't really matter. Because if you start growing out of this mold, that's where you start to find your own unique edge. Because when you start trading patterns with zero context, without truly understanding why this pattern works, when you start to question everything, that's where you really start growing, right? If you were to say, yeah, sure, this is a head and shoulders pattern. Let's say I give it to you as a head and shoulders pattern. You can very simply refine it to, oh, I'm actually just trading a range here. I'm trading my support and resistance here. There's not much else to go about it. And another thing that people will fall victim to in this kind of price action will be like, oh, cool, I have a bearish fair value gap here. Oh, that means I can sell, right? And then when they sell, they put their stop loss here, or like, let's say, be very conservative here and put their TP somewhere else. That's where they get caught up. Because they fail to realize that if they actually started to question this piece of price action over here, they'll start to say, hey, actually, what we are doing is we are just moving sideways. We're not really doing much. We're not respecting fair value gaps. We're not following through higher on this. We're not following through lower on this. So why am I going to trust that this will suddenly magically follow through? Logically speaking, it doesn't make a whole lot of sense. So when you start to question stuff and when you start to use a little bit more logic in your trading, that's where you start to see the market in a very, very different manner that only you can see. I can give you the exact same strategy as me. I can give you guidelines for my strategy, but you will never have the same performance as me because you don't see the intricacies that I see. Until I point it out to you, you will never see it. But even when I do, you will understand it in your own manner. And that's where the profitability comes in. Because if forever you're looking for like the next thing in the new textbook, let's say, who's a very reputable trader? Okay, let's say ICT suddenly runs a new course. Oh guys, you need to pay attention to this inversion, Reaper, fair value gap 3000. It's gonna make you money, man. And then all you're gonna spend your time looking for is this brand new shiny concept, and you're gonna actually lose sight of the logic behind why trading even works in the first place. You're gonna start to lose the sense of logic. You're gonna forego the usage of your brain, which doesn't make a lot of sense because this sport, this art requires a whole lot of brain power. Even support and resistance traders, it looks like they're just drawing boxes and lines. But I can tell you with 100% certainty, if they see the range looking weird, they won't even press the sell or buy button, even if it's at their area of interest. Give you an example. If you're a support and resistance trader, honestly speaking, will you be pressing buy and sell at these points? No. But is there a proper way to explain it or not? Is there a proper objective way to explain it? Not really. But the explanation you'll probably give me is, it just doesn't look right. It just looks so weird. Like, why are we chopping about like this? Why are we wicking so much? Shouldn't it just be clean price movement like this? That's where I want to get involved. I don't want to get involved in all this wiki bullshit. But what is the response you give me? It's nothing super objective one. Most of you just say, nah, it looks weird, right? And you just can't explain it. You just cannot put it into objective terms, which is why having that subjectivity could have saved you from taking a loss. But for instance, I tell you, or rather I show you this part. Okay, here, this support and resistance. Will you press the buy and sell button or not? Yes, right? It looks a lot cleaner. It actually looks like we are respecting the ranges in a relatively cleaner manner. There's just more spacing between the movements. There's just enough sort of areas for to tap you in and then continue lower, continue higher, whatever it may be. Whatever's inside here is good enough for you to want to take a trade. So that's the thing about trading. If you have that subjectivity, you're going to perform way better than someone who doesn't. Which is why, again, bring it back to the main point. If all you're going to do is refer to a textbook on the side of your table when you're trying to trade, you're not really going to make it very far. Because if, let's say, a trading opportunity comes by, you don't even realize it because you're too hyper-focused on looking for that specific pattern, then the trade will run without you and you can say goodbye. Or if, let's say, you try to capitalize on it, you chase price, you end up taking a loss. So start, well, it's a very crude way to put it, but start using your brain when you trade. Start questioning everything you see. Start thinking about why these things work, why these things don't work at certain times also. Because what these people will tell you when, they provide you material is, oh, this doesn't work all the time. Then when you ask them why, they'll be like, it just doesn't. It's enough. It works enough to make you profitable. You're gonna accept that? Chances are you're not, because we're all human. We need a reason to do XYZ. We need to know why it doesn't work. We need to know why it works. So just start using your brain a little bit more when you're trading. And then that's where you're gonna see a lot more profitability. Wow, I think someone has the dinosaur clip though. No, but I'm not gonna draw a dinosaur. It's like I could literally use this and then be like, oh guys, we are pushing lower, and then you just happen to play out. That kind of thing. I'm quite sure I used this actually, like this area here. I drew the face and the eyes here, and then I was like, guys, we're pushing lower because the dinosaur gonna puke. But it's damn stupid. It doesn't even make sense. Any more questions? Don't have? Okay, good. Then I will catch you all next time.